Trend lines are going to be one of the easiest ways to find success in the stock market. And I know sometimes, people overuse the word easy. Easy isn't always easy. Easy can be complicated. But when it comes down to trend lines truly are easy. It's all about just connecting the dots. I always think about when I was a little kid, I would go to these restaurants and they'd put crayons on the table, and there would be a 1, a 2, a 3, a 4, a 5, a 6, a 7, and all you would do is you would connect all the dots. And at the end, by the time you're done connecting the dots, guess what happens? It had a picture of a dinosaur or a picture of like a leprechaun or something along those lines. You guys may know what I'm talking about. And all we're doing is the same exact thing. This is the adult version of doing that, where instead of at the end we get some mac and cheese and some french fries, we are getting money paid in our pockets. Trend lines is absolutely incredible because all we're doing is just adding the bottom points, or sometimes we're adding the top points. But let's go into detail about this. Let's talk about trend lines from start to finish, A to Z, so you know exactly how to be using trend lines. First thing I want to discuss is, what is a trend line? Now, trend line's pretty straightforward. It's a line drawn over 2 pivot points. And what we mean by 2 pivot points is we're talking about 2 reversal areas. A pivot is either when a stock was going down and now starts going up, or a pivot is when a stock was going up and now starts going on down. So when we think about kind of like a standard picture of a stock going up, pivot points would be right here, right here, right here, or we could also think about pivot points on the top side right here. So a trend line would just be connecting these pivot points together to give us a nice hard area where we can go ahead and understand where reversals may be coming. So an uptrend has a positive slope and is formed by connecting 2 or more low points. The second low point must be higher than the first line to have a positive slope. Note that at least 3 points must be connected before the trend line is be considered a valid trend line. So this is going to be a secret in stock trading, okay? The quicker you can find a trend line, the more success you're going to have. So if I can see, let's say in real time, I see a stock going on a nice spike and it starts falling on down. And then I see that it starts bouncing right here. What I could do is I could say to myself, hey, let me connect these dots. Let me connect this low and let me connect this low. And now I'm going to make the assumption that since we started here and we bounced here, that we are going to have a bounce next time we come to this red line, whenever it may be. And let's say the stock starts moving its way on up and then it starts falling its way back on down. This would be an entry point for me because I know that this could lead towards another bounce. Now, the thing is, traders, especially new traders, like to have confidence. They like to wait till the very end before they enter. Because you know what they like to wait for? They like to wait for a bounce again, and then a spike on up, and then a bounce again. And then they say to themselves, wow, okay, you know what? It bounced once, twice, 3 times. It bounced 4 times. It's bounced 5 times. Now I'm going to get in on the 6th time. We cannot wait 6, 7, 8 bounces for us to get in before we feel confident. The earlier you get in, the better chance you have of making the most money. The later you get in, the better chance you have of what? Seeing a sell-off and getting dumped on. So while the later you wait, the more confidence you have because you can see it's working, also is deceiving because the later that you wait is going to lead towards that dump. It's almost like, I could imagine, it's like the Venus flytrap. You guys ever see those flowers, a Venus flytrap? It's a very beautiful flower. It's like a little bowl. And you know what? There's water in on these. And all of a sudden, people, flies come, they sit down, they start drinking some water, and then they shut and eat the fly. And the thing is, trend lines are almost exactly like that. And the fact that it looks appealing. Oh, wow, trend line, it's held this area once and twice and 3 and 4 times. I want to go sit on this. I want to go get some water. And then know what happens? The moment we get in on it, it starts turning and starts dumping. So we must be in early. We can't wait until it's so appealing that most likely it has already bounced so many times that that floor is getting weaker. Because that's all a trend line is. A trend line is just a floor. And if we again keep jumping on the floor over and over again, guess what's going to happen? Eventually, that trend line will crack. So we do have our uptrends. Uptrends, team, you don't want to be drawing uptrends all over the place. And one big thing that traders always ask me is, well, what time frame is the best uptrend? The best time frame for uptrends or downtrends is always going to be in larger time frames. Larger time frames, daily time frames, excellent. Those are going to be ones that everybody sees. When you get into 1 minute, 2 minute, 3 minute time frames, they may not last as long because not everyone sees them. Everyone is going to be looking at a daily chart. Not everyone's going to be looking at a 1 minute chart. So the thing is, the farther you zoom in, the more detail you get. And since you get more detail, you can make more uptrends and more downtrends. But be careful, because if those are not the sturdiest and the strongest trend lines, you're basically making trend lines that aren't going to be useful because they're just going to crack right underneath the areas that you expect a bounce to be. So let's keep talking about this a little bit more. Now, before we move on, we also need to talk about a downtrend. And a downtrend is the same exact thing as an uptrend. It's just a negative slope where we still have 2 pivot points, but each one of these is going to lead towards a lower high. So if I see that this play is fading and falling and dropping, and every time we come up to this top point, we see a reversal, this is giving me a great idea of saying, wow, hey, every time we crack or come up towards this point, I can go ahead and I can do a short. I could do a put contract. I could go ahead and say to myself, hey, let's make money as it starts turning back on down. So remember, same game plan applies. We want to try to find these as early as possible, but that comes down to having confidence in ourselves, not by gaining confidence by seeing so many different reversals that, guess what, we're going to be in at the very end, because there will be a point that the stock moves on up. There will be a point that this happens, that all of a sudden it starts moving on up and then it breaks on out and starts going on a very big spike. And the reason why is because we have fallen so much, it's now a buying opportunity. Or before it spiked up so high, it's now a shorting opportunity, or people are going to start taking profits. So here's an example of a downtrend. You could see we don't want to get in at 0.4 or we don't want to get in at 0.5. We want to try to get in at 0.2 or 0.3. The earlier, the better. It takes 2 or more points to draw a trend line, but usually, again, the textbook is always going to say that we want 3 points. 3 points before we have a validation. So what we mean by validation is understanding that we don't want to take guesses. We don't want to have just, okay, we have one bounce, the second bounce I'm going to look to be able to bounce, to get involved in. I'm going to tell you, it is very difficult to nail the second point here. What's more reasonable is to be able to nail the third point. Once you have one bounce and the second bounce, you can connect the dots and now figure out where that third bounce is going to be. You want to try to avoid fourth and on. The third bounce is the magic number, and as you guys can see, you get a monster move from here. The second bounce, you get a monster move, and even the fourth bounce, you get a monster move. But as we have already stressed throughout this lesson so far, don't try to get in too late. So, a big question we always get is, how do we draw trend lines? Trend lines, how do we draw them? Do we connect the lower shadows? Do we connect the upper shadows? And remember, team, it really comes down to this. It comes down to common sense. Okay? What looks the most reasonable? You don't need to overthink it. So let's look at some examples of today. Sound good? Let's go ahead and look at some examples of today. We do have a BFRG. BFRG, this has been a great example of an uptrend. And let's connect the dots here. Now, can everyone see what has happened over on BFRG? BFRG, we had a spike and we came on down and we got a great bounce play right here. And again, we had a spike and it came on down and we had a great bounce play right here. And we had a spike and we came on down and we had a bounce play right here and a bounce play right here. And then eventually it started getting weaker until, guess what happened? We got that big time sell-off. But this is, again, the Venus flytrap. We take a look at this and we say to ourselves, whoa, we got a bounce play here, a bounce play here, a bounce play here, a bounce play here. Hey, I'm getting in on the next bounce, guys, at 840. But it already bounced 1, 2, 3, 4, 5 times. You're telling me you're buying in on the 6th bounce play? Can't hold up any longer. Look at that reversal. Everyone starts dumping this play on off. But when it comes down to, again, looking for that best overall trend line, do we connect the lower shadows? Yeah, if those are the first 2 points. But that doesn't mean we just connect lower shadows the entire time. If it's a body of the candle and it's on the trend line, it's still valid. So if you have something that's a slightly above or something that's slightly under, that's okay, as long as you have the overall idea. You want to see another crazy trend line crack today? What about the S&P 500? The S&P 500 right here. This play, notice we have a nice drop and we have bounce play, bounce play, bounce play. And team, this is our Venus flytrap. It looks very appealing until we go ahead and boom, we get this big reversal. Little side note, as you guys can tell as well, 411 was the perfect area of a reverse. So I just jumped in at the price of 410.90. Stock did start coming on down, popped up to 411. I didn't feel too comfortable. I got out of this play, broke even on the stock, did just get a massive dump all the way back on down. Little side note, it just comes on down to past chart history pattern, looking at areas of reversals. That's how we can tell that we are going to start moving ourselves in that direction. But we can see that we do have a great opportunity on this uptrend to go ahead and be able to see that reversal on down. But they're all over the place. These are not just random examples I'm pulling from yesterday or again throughout the months or weeks or years. This is what's happening today. That's how often trend lines work, that they happen every single day and you can find them every single day. Did GFAI have a trend line today? Nothing I'm really seeing too much on GFAI. Let's look at yesterday. Look at GFAI yesterday, have an uptrend that set itself up into a wedge. And that's so great to see how trend lines can set themselves up in patterns that lead to very big squeezes and very big spikes and very big moves. So, there's so much that's so great about trend lines. And remember, you could see lower shadow, but then some bodies, then some lower shadows, then some bodies. It's about what makes sense. You don't have to connect to every little thing absolutely perfect. If you see, again, a great area, say to yourself, hey, you know what? This is what I want to be looking for, which takes us to our next point. Our next point is, how do we trade a trend line then? Like if we talk about this right here, about having all these trend lines, how do we trade a trend line? And the greatest thing that, for you guys to be able to note is there are actually 4 different ways to be able to trade a trend line. Let's review them all. You guys ready for this? So let's say that we have a trend, okay? We have a trend right here. And this stock so far has moved on up and moved on down and moved on up and moved on down and moved on up and moved on down. What's the one opportunity that we can do? We can say to ourselves, hey, I'm going to buy right here. And a lot of people bought right here. And a lot of people bought right here. And guess what everyone does? You can see that we have very minimal risk. Dek, how do we have minimal risk? Did you just not take a look over on BFRG? BFRG, that stock dumped. That's massive risk. That's only massive risk if we hold this play. But what do we know? We know that we're buying on the trend line. We know if it even goes right here, if it goes right here, if it goes right here, that this will dump. So the thing is, you're telling me if we buy here, we have all this room to make money. We have all of this room to make money. We have all of this room to make money. But all we can lose is eat. You're telling me we can lose $200 because we'll have stop losses, or we can make $3,000. Team, that's incredible. We're finding areas that you can only lose this much, but if you're correct, you win this much. The issue is people buy in on it, and guess what they do? They're losing. Oh, Dek, the trend line didn't work for me. I just blew up my entire account. Well, did you set your stop loss right underneath the trend line? No, I was hoping it was going to bounce back on up. Well, you didn't follow the game plan at all, right? It's like being a quarterback of a football team and being like, coach, the plays that you, again, wrote up didn't work. And it's like, you didn't call the plays that I told you. Yeah, well, I didn't like those plays. So everything you just said to me is absolutely pointless. I told you to pass the ball, you ran the ball. I told you again to run the ball, and again, you passed the ball. I'm telling you, play trend lines, but have a stop loss. If you don't set stop losses, there's nothing I can do for you, right? I'm showing you exactly where the best entries are going to be. So the thing is, team, what we have here is first entry we can always do is a bounce off the trend line. The bounce off the trend line is always going to be fantastic because you know what? If we bounce off the trend line, we are always going to put ourselves with what? High reward and low risk. High reward and low risk. How great does that sound? That sounds like the trading that I want to get involved in. Our other entry could be we wait for the crack. And once we get the dump, we go ahead and do put contracts. We go ahead and do shorts. And we say to ourselves, hey, this is absolutely fantastic. So we can go ahead and do put contracts. We can go ahead and do shorts and wait for that dump. Because once again, everyone starts stop losses, start getting triggered. We know that stock's going to go on down. And that's where we can take advantage of it. What's another entry that we can go ahead and take a look at, guys? Well, sometimes, not always, but sometimes we are also going to have a trend line up top where we can do the same exact thing. We can go ahead and do put contracts up high, or if we do break on out, we can go ahead and buy it because we know stop losses for put contracts and shorters are going to be up high. Now, let's go ahead and reverse this entire thing. Let's imagine it's a downtrend. If we have a downtrend on this play, let's say something that's heading straight on down, and we have a stock that is moving up, then comes on down, then moves on up and comes on down, then moves on up, then comes on down. Where's our entries? Well, we already know, guys. Put contract, shorting contract, put or short. We have all this room to fall, all this room to make money, all this room for us to collect, and we only have this much room to lose, this much room to lose, this much room to lose. Beautiful. Okay, Dek, hey, it's starting to push itself back on up. Pushing itself back on up. Guess what happens if you jump in on that play and it starts breaking on out? No worries, you take a $200 loss. But as you know, if you do start seeing this thing start breaking on out, we can go ahead and jump in on this play because we are breaking the trend line. And guess what happens? As we know, we break the trend line and then boom, we start getting a spike back towards the upside. So there's so many different ways that we can trade, but it's really all the same exact thing. Trend line bounce or trend line short, we have stop loss on the opposite side of the trend line. We can only lose a little but win a lot. If it does break on out, we can always get out and jump in on the other side because that's where the breakout's going to be happening. So we're learning about how to find trend lines, how to play trend lines, and be able to understand how trend lines actually work. Now, it really does all come down to the plain fact that when you are above a trend line, you are considered bullish, which means there's more buyers on this play. So if you ever see a trend line, you're considered bullish when you're above it. If you're underneath the trend line, that is where you are considered bearish. So I want to show you guys exactly what I mean by this. So let's go ahead and take a look at, the most popular examples there are here. All right, let me grab these and you can see when we are above that trend line, bulls are in control, which means there's a better chance of seeing it go up than go on down. Bulls are in control. And when we go underneath the trend line, bears are in control. So let me ask you a question. Unless you're shorting it at the highs, right? Unless you're shorting it at the highs and then you get out and cover near the trend line and you short near the highs and get out near the trend line, you should never be on a short when a stock is consistently moving on up. Never. If you see a bullish trend line, why would you short it unless you're nailing these highs? Instead, look for a buy off the bottoms, and then once it crosses over, go ahead and do your short. So when you are bullish, be on the long side. When you're bearish, be on the short side. And this gives us a little bit of an understanding right away of what we should be looking at. We don't want to have 50-50s. We don't know if the stock's going to go up or down. But if I could see, okay, we have a bullish side or a bearish side, now it's at least giving me like a 60-40, 60% chance of winning and 40% chance of losing. This side I have a better chance of winning on the buy side. This side I have a better chance of winning on the short side. So bullish, bearish, bullish, bearish, bullish, bearish. And you could see where these trend lines are reversing. So as of course we've been talking about, this entire lesson is all about understanding trend lines, what they are, how to be able to play them, how to be able to connect them, and understanding that we can go ahead and be able to make a lot of money over on these stocks the moment that they are on the bullish side or the moment that they are on the bearish side. So this is why trend lines are so fantastic. This is why trend lines are so amazing. And I want you guys to be able to start implementing them over in your trading strategies.